If you have children, then you might be aware that there were some major changes to the child tax credit, or the CTC, that took place during the COVID-19 pandemic. Once the pandemic ended, a lot of these changes were reversed. In today's video, I'm going to explain the key changes that have taken place to the child tax credit in the past few years. I'll also go over how some of these changes are impacting families across the United States. Without further ado, let's dive in. What is the child tax credit? If you're not familiar with the child tax credit, or CTC, it is a tax credit that allows people who have eligible children to subtract a certain amount of money from their taxes that's owed every single year. This tax credit is designed to help people with children to get some financial breathing room and make it easier for them to afford to pay their taxes. You see, the government allows this tax credit to exist because parents have to deal with many additional expenses associated with raising children that people without children just simply do not have to deal with. So, it is a special tax break for people with dependent children. Let's discuss some of the changes to the child tax credit during the pandemic. You see, before the COVID-19 pandemic occurred, the child tax credit was worth $2,000. There was an earnings requirement. It was paid in one lump sum at tax time. However, once the pandemic went into full force in 2020, many families started to struggle immensely. And this is because millions of people lost their jobs. Additionally, millions of people became sick with COVID-19. This meant that many breadwinners in the families had to take a significant amount of time off of work. And between the times off of work and the large amount of job losses that happened in 2020, many families in America were finding it much more difficult to keep up with the everyday expenses. This included childcare. So, to provide American families with financial assistance during the peak of the pandemic, the government passed the American Rescue Plan Act in March of 2021. This $2 trillion package contained many provisions designed to provide financial relief to Americans. For example, the act did all of the following. It extended unemployment benefits, it sent stimulus checks to citizens, increased food stamps and housing assistance, dramatically expanded the child tax credit, and the American Rescue Plan Act raised the child tax credit from $2,000 per child to $3,600 per child under 6 and $3,000 for children under 18. Also, half of the credit amount came in the form of monthly payments. Additionally, the income requirement was waived, which meant that even parents with no taxable income could be eligible for this tax credit. The credit was also made fully refundable, meaning that people who were eligible for the tax credit could receive the money as a refund from the government if they didn't owe any taxes. For millions of families, the expanded child tax credit was a major blessing during one of the single most difficult financial periods in American history. For a lot of families, the expanded child tax credit made the difference between being able to stay afloat financially. In fact, in 2021, after the CTC was expanded, the child poverty rate dropped to its lowest rate ever, 5.2%. Just 1 year earlier in 2020, it was around 10%. It was estimated by the United States Census Bureau that the expansion of the child tax credit lifted approximately 2 million children out of poverty. Although the CTC expansion was highly beneficial for families throughout the nation, it was the most beneficial in states with high poverty rates and low cost of living, such as states like Louisiana. Changes to the CTC. After the pandemic, the dramatic expansion of the CTC during the beginning of the pandemic only lasted about a year. Once the pandemic started to die down in 2022, the changes that were made to the CTC in the American Rescue Plan Act were allowed to expire. The child tax credit returned to the original structure that it had before the pandemic. This meant lower credit amounts, no advanced payments, and an exclusion for people with lowest incomes. Currently in 2024, the CTC is worth $2,000. A portion of the child tax credit is still refundable. However, it is not fully refundable like it was during the pandemic. Let's discuss the impact of the expiration of the COVID-era CTC rules. As you can imagine, the reverting of the CTC back to its pre-pandemic structure had some strong impacts on the population. For example, the child poverty rate increased to 12.4% in 2022. This represented the largest year-to-year increase in the nation's history. So what happened was the million of American families benefited greatly from the expansion of the CTC, but a lot of them started to struggle again once the expansion was phased out and once the CTC went back to where it was before the pandemic. Many people did not want the CTC expansion to be phased out after the pandemic because it helped to lift so many children out of poverty. However, many others believe that it was only necessary due to the extreme financial circumstances that the pandemic created on America. Some people argued that removing the income requirement to receive the CTC eliminated some incentive for people to go out and look for jobs since they would receive significant child tax credit payments from the government. Of course, when the government makes direct payments to citizens, these payments have to be funded by something. And generally speaking, when the government needs to fund something, it either raises taxes or prints money when it doesn't have money available. So this can lead to higher levels of inflation or an increase in the deficit. Let's talk about income versus no income for the child tax credit. I just want to take a second to explain refundable tax credits a little bit further. If a person has income, then a tax credit will create a dollar for dollar reduction of his or her taxes. So if a person owes $5,000 in income taxes but qualifies for a $1,000 tax credit, they would only owe $4,000. This does not require the government to spend any additional money. It just means that it receives slightly less in tax revenue from this person. However, if a person has no income and if the tax credit is refundable, it means that the government has to pay the person the amount of the credit out of the government's own pocket. Considering the massive amounts of national debt that our government already has, paying a higher level of refundable tax credits can put an additional strain on the government's finances. The reason why I'm explaining this is because you might be wondering, why can't the government simply just raise the refundable portion of the child tax credit to say $20,000 instead of less than $2,000, which is where it's at now? It's because this could force the government to either print a lot more money to finance the credit or raise taxes. The child tax credit is a heated topic because on one hand, it is very difficult to argue that lifting millions of children out of poverty is not a good thing. In fact, there is even research that suggests that when children are lifted out of poverty, it improves outcomes in education and health and leads to a higher incomes in adulthood. But on the other hand, many people believe that if you increase the child tax credit too high, it puts too much of a burden on taxpayers and the government to finance the payments. This could hypothetically lead to worse inflation and higher taxes. So what will happen to the child tax credit? Well, for now, at least the child tax credit is set to remain at $2,000. However, there is legislation that's being debated in the Senate right now that would expand the child tax credit again. This expansion would not be quite as large as the expansion that took place in 2021. For example, it would not dramatically increase the credit amount, but it would increase the refundable portion of the credit. So people with little to no income would be able to get more money in the form of a tax refund if the new tax rule is approved. However, the new tax bill has been stuck in the Senate for a number of weeks, and it looks like senators have been unable to come up with an agreement on what to do about the proposed changes. You see, changes to the CTC are just one out of many tax changes included in the $78 billion tax bill that is currently stuck in the Senate. I have another video explaining all of the other changes, so feel free to check that video out as well. The bottom line for the child tax credit is that when it was expanded, it helped a lot of people during the pandemic. But as with any other benefit that the government offers, it has to be funded by something. And many people were hurt financially when the expansion was now canceled. But many others believe this was the best thing to do with the tax credit. We won't know exactly what will happen to the child tax credit until after the Senate votes on what to do with it. But once this happens, I will provide more updates on this YouTube channel, so be sure to subscribe. Now, before I end this video, I just want to remind everyone that I launched a new community called the Tax Strategy Accelerator. And inside of this community, there is an incredible amount of resources that me and my team have curated to help you learn more about taxes and to help you save more money. You can also network with other entrepreneurs, professionals, movers, shakers, and investors inside of the community. Additionally, the Tax Alchemy Advisor team and I drop tax gems, answer tax questions every day inside of the community on a regular basis. You can get started in the community for free. There's a link in the description below, so be sure to check that out. That's all I got for this video today. Thank you so much. Make sure that you like, comment, and subscribe, and I'll see you on the next video. Cheers.